our next session now. And this is going to be a very, very interesting panel discussion on the topic, Let's Open Finance, the how-to guide for India. So our panelists will be sharing with us how it is possible to create a playbook that can be used by all parts of the ecosystem, such as insurance, banks, technology companies, to serve the vast population that is still underserved when it comes to the availability of financial products. Let me take this opportunity to introduce our panelists. Our first panelist for today is Mr. Deepak Sharma, President and Chief Digital Officer, Kotak Mahindra Bank. I'd request you, Deepak, to come on stage. Deepak heads Kotak Mahindra Bank's digital initiatives, where he drives digital channels, payments, transformation, business model innovation, and future-ready initiatives of the bank. With close to 3 decades of experience, Deepak's professional tenure spans across banking, telecom, and consumer services industries. He's also a member of the Governing Council of SamvAAd. Welcome, Deepak. I'd like to now, yes, please, loud round of applause for Deepak. And now I'd like to welcome Mr. Deep Agrawal, who heads payments and account aggregator business at PhonePe. Welcome, Deep. Mr. Agrawal oversees the entire payment suite of offerings across the PhonePe ecosystem and is responsible for actualizing and launching the AA business. His contribution to launching innovative products has received several awards from many notable entities such as NASSCOM and the likes thereof. Welcome, Deep. Our third panelist for today is Mr. Abhijit Gulanikar, who is the President, Business Strategy from SBI Life. Mr. Gulanikar has over 20 years' experience with the insurance industry, both in life and non-life. During his tenure with the industry, he has handled various functions such as investments, finance, planning, and strategy. Welcome, Mr. Abhijit Gulanikar. In order to moderate today's session, I'd like to invite Mr. N.S.Ramnath, senior writer and part of the core team at Founding Fuel. Mr. N.S.Ramnath is also the co-author of the book, The Aadhaar Effect. Welcome to all our panelists, and the stage is yours.
Good afternoon. If you read the newspapers or if you talk to certain sections of society, you'll find a sense of pessimism there, right? And then contrast it to what you see around. There's a lot of optimism. And the cause for pessimism, there are quite a few. Economic uncertainty. In Bangalore, where I come from, people often talk about the funding winter, down rounds, and so on. But here, it's a lot of optimism, and I have my own theory on why there is a sense of optimism here. One of the reasons, I think, is we're actually looking at future, right? The previous speaker said it is easy to overestimate what technology can do in the short run, but underestimate what it can do in the long run. And many of us have some sense of what it can do in the long run. And even more importantly, having actually worked on it, many of you and many of us have a sense of how we'll go from here to there. And that is exactly what we are going to talk in the next 30 to 40 minutes in this session. And I'll probably start by asking a question to each of the panelists. What is your vision for open finance in the next 5 years in terms of interoperability, security, innovation, customer experience? If you can kind of give us the big picture. Deepak, if you can start.
So, great question, because I've been a strong believer that India is very, very uniquely placed, unlike our Western counterparts. When we talk of open finance, I'm not talking about everything else, because we probably are the only country in the world which is becoming data rich before we become economically rich. That also means that data itself creates new opportunities for access to credit, because you do not have the traditional bureau and the credit underwriting engines which can understand the intent or the behavior or the credit worthiness of every single citizen of this country. So at a macro level, I think this is what I would say every citizen of the country can have the power of the data around which he or she can access a formal financial service across. I think the second important thing I would say is that, and you were right in your opening statement that in short run we overestimate and in long we under. But I think as it has happened with any of our India stack component, I think there has come an inflection point and then there has been no looking back. I think we are yet away from that inflection point, and that's why you would see a bit of pessimism. But there was a similar pessimism for everything that happened here, be it Aadhaar or be it UPI or GST. And I think I'm a very, very strong believer in an idea which is good for citizens and people. It may be a little tough, it may be longer, and this is what I keep telling Mahesh and SamvAAd team, but it is bound to succeed. There is no two ways about it. The question today is about, a lot is on the privacy and consent, which of course needs to be addressed, hopefully with DEPA coming in, everybody knowing as a citizen what are my rights on data, how my data is protected, how my data will be anonymized, will there be any security breach around the data? If there is, then what is my recourse in such event? So I think one track is more about me, my data, and how my data is flowing through the ecosystem. The second big part of this is who are the custodian of data and how is the data getting shared, and I think that's where the whole A consent framework comes in. The third is, I think, what is the value that we create out of it? And a lot of times, like all of us here are trying to beat banks, fintechs, account aggregator licensees, and many other market makers. I think we need to agree and figure out what is that ecosystem going to look like, and thereby what is the value each one in the ecosystem. Those who are the financial information providers or users, or those who are making this whole ecosystem work, how will they all play together, be it in terms of access, be it in terms of revenue, be it in terms of seeing that there is a value for everyone. I think some of those questions need to be answered in greater detail, and being on SamvAAd Council, I think this is one of the points I have raised, because I think it's important for us to have those bold conversations which can help us move forward and fast, rather than trying to say, oh, we are not getting support, some of the banks are not opening up, we are too slow to move. I think we need to go and figure out what are those underlying issues that is probably slowing down things a bit. And as we understand and address those concerns, I'm sure we'll make a faster progress.
Yeah. Importance of data, value for everyone. Deep, how do you see?
So I think everybody talks about how underpenetrated the formal financial services market is in India, right? And if you look at the three pillars of financial services after payments, which is credit or insurance or investments, most of, in fact, all three are in single-digit penetration levels, right? I think if you would ask me, ideally I would, 5 years hence, want this single-digit penetration to go up to a very, very high formal penetration, right? The way payments has been able to in the last 4-5 years, largely thanks to UPI, we've been able to move from a 90% plus cash economy to a 60-70% sort of a number, right? How it has been made possible? It's been primarily enabled by an open interoperable framework, which allows ecosystem players to contribute and build products and experiences based on their understanding of the market local to them, and try and solve for use cases and problems which help scale very, very quickly. This has to, obviously, like Deepak mentioned, be useful for all the players who are participating in the ecosystem. It has to make sense. And that is an ongoing dialogue. We need to probably get to a point where we have an answer across the ecosystem, how it creates value for everyone, whether it is FIPs, FIUs, AAs, consumers, merchants, everyone, and figure out the right approach to achieve it.
Yeah. Abhijit?
So I'll just restrict myself to insurance space. So currently what is happening, and he talked about, insurance penetration being single digit and all, is we have to realize that large part of India is in unorganized sector. So unlike all the examples that are cited, where large part of the population works in organized sector and you can have a formal data, in India, everything is informal. And whenever we go out of government employees and organized private sector, not people who are working with shops as salaried guys are not organized, right? So how do you get their data? And there is a huge friction that happens whenever we try to do. AML guidelines are there, our underwriting guidelines are there, which we cannot meet because it's hard to get the data. So whenever account aggregated framework gets fully implemented, and we've started using it already, and with this history of UPI already being there, that lot of organized sector guys will have cash flows coming into their bank account because of UPI, which was not happening earlier. And GSTIN also now becoming part of the account aggregator framework. It will come, soon. Then we have a good handle on the entire unorganized space. Agriculture, I'm still not very sure how we will handle that. But there also, I think with SBI, we know that lot of lending does happen there, and they also now have bank accounts and stuff like that. But all the SMEs, individual entrepreneurs, stuff like that, the data would be available. And onboarding, while meeting all the norms on AML and doing good underwriting, will be extremely easy. Of course, it will take time by the time everybody adopts. But I think there's a big scope because this is the unique challenge which other countries don't face, which we face, which could be solved only if we have this infrastructure. Otherwise, we would have continued to bungle around for many years before we could reach the customers in a very effective manner.
Yep, great. Both Deep and Abhijit mentioned UPI, and in some ways UPI set a very high standard for other DPI to reach up to. PhonePe has been at the forefront of, one of the pioneers of UPI. Are there any lessons that we can learn from the rollout of UPI in the account aggregator?
So I'll break this down into two parts. One is any such large-scale impact which is to be created needs a lot of ecosystem things to come together, right? I mean, for UPI, a bunch of things came together. 2016, there was demonetization, which provided the first fillip towards, consumers or merchants moving to digital payments. The second one was government taking a lot of interest and pushing it through all medium, and that really worked in its favor. I think the real step change came during COVID, when all the fence-sitters, essentially, either consumers or merchants, they had no choice but to move to contactless or digital payments. And that stayed since then, right? I'm not saying all of this needs to happen for an A, for example, to become successful. But I'll give you a small anecdote and to kind of underscore this point, right? Back in 2016, a very, very popular South Indian eatery here in Matunga in Bombay. I visited them, had food, and I wanted to make the payment. And when I went to the payment counter, that guy said that you'll have to, I obviously took out my card, which was very popular then. And the payment counter guy said you have to pay some 30 rupees extra for it and stuff like that, right? And it was against my principle and obviously not the right thing to do. So I argued a lot, and then I finally, ended up paying cash. I visited about 1 week after demonetization was announced, and the same person said, "Sir, I don't want cash. You just tap and pay or make a card transaction." So I think a lot of these external factors are important to make things happen. The second aspect is the overall product and the kind of experience which we are building, right? The choice has to be, you have to understand what kind of use cases solve for consumer needs. I'll give you an example, what we did with PhonePe. We created a very simple flow called pay to self account, right? A lot of us actually typically maintain at least 2 accounts. One account where we probably receive our salary, and the second one to spend money from. And what we noticed was that a lot of users were actually doing transactions between their own accounts. It was a very simple eureka moment, and we just brought it front and center on the homepage, and it does millions of transactions even today for us. So you have to identify the use cases and solve for them in a simple manner which work for you.
Yeah, thanks. Deepak, from what Deep said, there are 2 things, right? One is the extraneous factors, something that we don't have control on, like he mentioned demonetization. And another one is kind of sensing what is happening with the customer and quickly responding to it, adding those features, making it easy for them to do. In case of Sagamati, where do you think we should be? Should we depend on some external factors to give it a push? Any tailwinds that you currently see happening? And what are some of the innovations that you have seen similar to one that Deep mentioned?
Yeah, I think external factors can be far and few, right? So, I mean, you cannot expect, even though right now the 2,000 rupee notes are being taken out, but I don't think it's anything to like the demonetization, right? So I don't think you will have moments like those, but yes, for example, COVID and some changes in policy during COVID, for example, the whole video KYC and the ease of onboarding did come around, and banks like us through 811, we took advantage. But yes, I think you need to be ready if there are any external factors. I would strongly believe in building businesses still in the old traditional manner, around things which are constant. For example, all of us want greater control on how we use our money and where we use our money. These are universal facts. This cannot change. I may have, all of us don't want to talk about our finance, but we still need someone whom we can trust. That means dealing with money still has a very strong privacy, just like dealing with health is, right? So there are few things you only talk to people whom you really trust in. So I think building things for customers, all of us have universal concerns around our retirement. Do we have enough corpus for taking through our life when we are not professionally employed? Is this the right thing? For example, if I'm on a revolver on a credit card and I'm paying 3.5%, is there a better way to manage my debt instead of paying higher rate of interest? Am I getting a better deal on borrowing? Or if I'm taking an insurance policy, for example, is this the right policy? And I think today, a lot of businesses have been built around those, right? So price comparison, insurance marketplace, wealth tech, everybody is going and saying, I will build on what are the inherent concerns of customers. One of the things that comes out pretty well through the whole SamvAAd and A is about whenever, whatever I want to do, I need to see that how my data can create value for me. All of us give so much data to Google because Google gives me an outcome for the input that I provide Google. As a consumer, all of us are okay to share information with someone who adds value on top of it. So you don't mind going and sharing with your wealth advisor about your financials or to your doctor about your health, because you know that if I give you my information, what is the value add you put on top of it? And thereby I get more enriched. A, in my mind, is something very similar. If I am ready to give you data on my financials, if I'm going to provide you data around my loans or my credit card spends, can you tell me, hey, listen, why are you on revolver? let me give you probably a low-cost loan where you can settle your card outstanding instead of paying 42% interest on your credit card revolver. Take a loan at 14%, retire your debt, you can save so much and come back and manage your debt a lot more carefully thereafter. There is a problem statement to be solved. It needs a data and a consent. You can solve it well. Same thing on financial planning or long-term wealth. Today, a lot of people, if A can tell us clearly what is your earning to spend ratios, how well are you doing if you are earning 20,000 or 30,000 rupees, and if you are just saving too little, that data can tell us, can I do a better financial planning, looking at my statement analyzer, analyzing how am I faring vis-a-vis people like me, and thereby, can that build a better financial saving habit in the citizens? Because if you know, in India, saving rates are on a decline. So I think there are large social problem statements, there are commercial opportunities, which connects back to what, as a consumer or a human, all of us would like to see value in. So rather than seeing this as a commercial opportunity, I would say first, build a business which connects and touches people's life. There is money to be made, but I think there is a bigger purpose over profit. And I think if there are businesses getting built around purpose, profits would follow. But if you're looking at it this as more as a commercial opportunity, then as I mentioned in the beginning, I think this whole ecosystem will keep questioning what is it for me and why should I be part of it. And I think that's how we need to build this as I look at this whole roadmap of way.
I think that's a fantastic explanation of the value proposition of AA. If someone wants to get into it, what are some of the technical issues they're likely to face that needs to be ironed out? Any one of you, what are the things that they should be aware of as they start the journey?
So I'm looking at it as a user, not so much as, I think still, we are using mainly data from banks, as of now at least. There is still friction in that process. It doesn't come as smoothly as, we would want it to be. And there are authentication failures, and then there are data transmission failures. And at times we are not very sure why it has happened. At what end. And I'm not a technical guy to say, how we can fix it. I'm sure there will be solutions. It just, any system takes time to settle. But to have really smooth onboarding, some of these issues need to be ironed out. Second important thing which I think which needs to be figured out is, not only at the time of onboarding. For consumer, if you ask me, and for people who have organized investment, the NSDL or CDSL combined account statement that comes has been a huge boon for financial planning. People who were organized also would forget that there is this one mutual fund investment I did 4 years ago, and you would just forget it because you are not regularly investing. Just comes at one go, right? With bank accounts, insurance, everything, if some service can be built up, that huge unclaimed deposit, insurance policies, mutual fund that are lying across all financial services entities can go down dramatically. That, according to me, is a huge benefit to the customer, and that typically, unfortunately, happens. It happens for a person who's living also because you forget, but unfortunately happens when the breadwinner goes away. And we've seen a lot of challenges when we are playing claims as to what the family goes through. They have absolutely no clue. The agent which goes and says that, boss, you had a policy. Family says, ye kya hota hai? It starts, for some families, it starts from there. So for those guys, if there is some combined place where they can get the entire financial data of the family or the breadwinner, it provides great financial security to the family.
Sure. Anything you would like to add, Deep?
No, I think technically there is, as I said, banks have to invest on the infrastructure to make sure that more accounts, more consents gets discovered. So the question that you asked, since I'm on the other side, I can tell you. So I think banks are still a bit concerned about how this whole ecosystem is coming around. For example, as we speak today, everybody wants to come in as FIU. but there are no clear guardrails yet for FIPs. What kind of schemas, what kind of data do you contribute? How do you come and start contributing rather than fetching? Everybody wants to, it's like everybody wants to take water out of that well, but nobody wants to put the water in the well. Now the question is, somebody who's putting the water in the well is asking that, what is it for me? So I think some of those are tough questions. Those questions needs to be discussed in smaller groups. It needs to be addressed across the industry, because as I said, this is for good. I think it's equally important to understand if there are some niggling doubts. For example, I know there are NBFCs who are fetching all the data for bank customers, but NBFCs are not contributing any data of their customers yet on A. So obviously, you will ask this question if you are a lender on the bank side that, hey, why can't I get access to the data of a customer who has a loan with a certain NBFC? Or probably same thing today about broking or mutual fund, because it's easier to get as an RIA and start to do a PFM or a data aggregation on wealth management, but very little you contribute back. So I think this whole thing is about, while investment on technology, I would say, is still a very, very small thing, because we have invested virtually on every single tech today in financial service. If it makes sense, it gets even fast-tracked. I think we need to create that sense of urgency to make sure that there is sufficient technology bandwidth, investment, and mind share is built towards scaling and making it successful.
So I would just put, more than technology, some aspect as to, say, take UPI as an example. Volumes have just gone through the roof, and there is no compensation for the investment being made by all the players. Now there is some fee. There is a huge customer and the user convenience, merchant convenience. And there has to be some model, and I don't have a model in mind right now because it's too complicated, but some model where fee has to be shared. It may not be huge, even if it is, I'm just making it up 10 paisa per transaction. It still will, put some logic to why you would want to invest. So that UPI 10 paisa, here will be something different, but for the transactions to flow both sides, there has to be some commercial angle. So say, suppose I as a financial user, it charge some fee, and that is passed to the provider. Just, something that to be worked out. It will make the interest aligned, and, more people would be inclined to share data and invest the money required in the technology.
Yeah, that is something that I've heard very often, that especially technology is the easier thing to solve as long as there is intent. And God knows we have enough and more capacity in this country to solve some of these problems. But what is difficult is probably the softer aspects that you spoke about, getting small groups together, aligning the incentives and so on. So if there are 3 things that you would probably do in the next, let's say, 3 to 6 months that you would prioritize, what would those 3 be? And after that, we'll open the panel for questions.
So I think one is through various influence groups, including SamvAAd, we are just trying to make sure every single participant who comes in as a FIU also has a meaningful contribution as FIP. That's number 1. Number 2, of course, to find how both the security and the integration of different A's, because not all A's have been able to integrate across all FIPs. How do we fast track and ensure that we are taking this to scale and thereby not have a limited or a misjoined kind of integration. And third is, I think part of that was covered in the previous presentation. Look at clearly from a customer lens, what are the values, use cases that needs to be created afresh rather than build this just as a data fetch and a consent layer.
So I think the first one is customer awareness. Right now, I don't think customers really appreciate or understand what their data means and what giving consent really means, right? So that's the first one. And we are hoping that with the kind of customer franchise we have, we will be able to create that awareness. The second one is at a industry level, like both Deepak and Abhijit have mentioned, we need to agree on the right incentives for the right ecosystem players so that it scales, right? There is focus on investing in it. That's very important. The third one is, like I've been mentioning earlier, finding out the right use cases which get customers hooked onto it. These are the three areas which I would focus on in the next 3 to 6 months.
No, I think 3 to 6 months, I think for me also customer awareness, because whatever we are doing, if the sales guy is saying that, why are you looking for bank statement? You can do it. The sales guy registers him on the account aggregator, fetches the data, and that's how we've been able to do whatever number, small numbers, but we've been able to do. Second thing which we are working on is again the same use case as to what analytics can we do on that data. As to improve upon, we have a certain engine which is historical, whatever. Now the paradigm has changed, and no reinsurer in the world has that. Let me be honest, this is everything new. So India will have to invent the model. I'm not saying it will be ready in 1 year, but the first steps would have to be taken in next 3-6 months to see that we are ready whenever this takes off in a very big way.
That's fantastic. I'll open the floor for audience. If you have any questions, please do ask.
Hello. I'm interested in kind of asking a little more about opening up finance for the unorganized sector and informal economy that you already talked about since. I guess the main point of Account Aggregator that's appealing is the democratization aspect of it. So what do you think are the main challenges in order to open up finance for the unorganized sector? And how can it also be leveraged and used for the Indian economy? Like, how can it actually be beneficial to open up finance to the informal economy, given its large number in India?
No, I think great question, because we spoke most of the time about opening of the data, not really finance, right? So I think data is the bedrock on which we need to build the real-time credit decision, or using data to underwrite a particular transaction, provide access to credit at the point of consumption. So I think some work which is directly not as a part of A, but has been happening as a part of the Open Credit Enabled Network, or OCEN, which is largely at the back of scoring and looking at the GST data, the flow of invoice and goods, and seeing that how do we underwrite. Incidentally, we were the first bank to start providing credit on that Open Railroad when the GEM Sahai or the government e-marketplace transactions opened up. End of this month, we will be also live on the GST Sahai as that gets rolled out. So I think we are seeing progress. I'm sure many banks and financial institutions will join the fray. And these are a very different kind of a credit. These are short-term credit. These are credits typically between 30 to 90 days, unlike the long-term credit underwriting, which took a lot of financial documents. We are verifying the credit and transaction on the flow. That means if I see a transaction, you need access to credit, I can give you a decision in less than 9 minutes, including the disbursement. We are solving for also the problem of the customer onboarding through the electronic KYC route for small businesses. I think as we have seen Udyog Aadhaar and the data flow that is coming through consent. There is also RBI is building a central utility that they are going to be launching soon, where a lot of data can be just, lenders can plug into that ecosystem and can do a real-time underwriting, and you can track even the loan that's been dispersed. So I think overall, it's not just a willingness to provide credit to small business, but also to see that how you have an end-to-end visibility so that fewer people do not abuse the system and thereby erode the trust of this ecosystem, and also see how do we integrate collections as a part of this whole loan dispersal. So I think there are some work happening, but yes, that's again a great opportunity for, if there are folks from startup in this room, to not just worry about on the lending side, but work on the collection side, especially as some of these things will roll out at scale.
Deepak, I have one more question, additional question. A lot of people talk about credit. What about savings product? To what extent this will actually help launch maybe new savings products, and especially for the
So saving form factors have started to change, right? So earlier saving account was a saving. Now today you're saving depending on your liquidity, and the time horizon can be across different instruments. So, and for a lot of people between saving, investments, there is a very thin line. So the question is, if you get certain amount which is a free cash flow, if you are a small trader, see, for salaried people, saving comes naturally because every month you get a certain salary and you have certain expenses, and thereby you can plan stuff like SIPs or probably any other investment. But if you are a trader with an unpredictable cash flow, I think this kind of account aggregator helps us build certain tools, including like your income forecasters. How can you predict what basis your business, what the cash flows can be, and thereby if you have to plan certain saving, which not necessarily is a fixed tenure or a fixed amount saving, but a flexi saving. So I have 500 rupees today and I have 5,000 rupees tomorrow. How do I still create certain products basis inconsistent cash flow? And I think a lot of those products will get built as you start seeing the data and the flow better.
Thanks. There was a question.
I just like to add one thing to her question. Why are we doing all of this, and why open finance, right? I think the final objective is to contribute to the growth of the country, right? If consumers are able to get a lot more credit, for example, or merchants are able to get loans, working capital loans, they'll be able to transform this into higher economic activity for themselves as individuals. And that will finally end up growing the GDP of the country. So that's the larger objective. And it is honestly at the scale at which we are as a country, it's not really possible to be done by one entity or two entities. It has to be opened up. And that's where all of our open interoperable platforms, which is shown by, like UPI or Aadhaar, which acted as the identity platform for the country, essentially, right? These are the ones which have already provided us the framework. And I think AA can just enable that by opening up data.
Yeah.
Hi. My question is around in future, both from a B2B and a B2C perspective. Credit is, at least as a startup founder, we see that in future the lending is going to be around experience from a B2C standpoint, or from a B2B standpoint from an opportunity, right? That how can you give credit for someone for an opportunity or for an experience, right? My question is around alternative credit data points. That do you see any guidelines coming in future around what would be sort of the approved alternative credit data points apart from the the standard GSTN or the standard data points we have for B2C or B2B? Do you see that any sort of guidelines will come into play, that these are sort of the approved credit data points, right? Obviously, taking out the PII information. PII should not be taken into account. But if you take out the PII, do you see any sort of guidelines coming into play? Thank you.
No idea, frankly, let me tell you. But all I can tell you is GST is just one of the very small slice of what we are looking at. The credit is moving more from an individual or a business to a transaction and the point of consumption, right? So I think credit getting embedded in the flow of money rather than the use of money for an entity. That's largely where, but yes, I think where the kind of monitoring that will come in for these kind of transaction flow, because now you know what is the end use of money. I'm not giving you money and whether you have actually deployed for the right end use for which you borrowed or not, I think that visibility to lender was not there, especially when you were giving the credit on the business side. As now you are underwriting a transaction, you know that you did buy a product for which I gave you credit. And then I will start scoring the risk on that particular transaction type. So those credit models are yet to evolve, but gradually that's where you will see a lot of work happen.
Thank you so much. I'm so sorry, in the paucity of time, we will not be able to take any more questions. Apologies for that. I would request Shalini to please come up on stage and felicitate our esteemed panelists. Thank you so much for your time and for sharing your thoughts so generously.